Hi, and welcome to Market Conversations. In this video, I'm going to go ahead and talk a little bit about Alibaba as well as share some option strategies to possibly hedge your portfolio. So once again, Alibaba is down in the Hong Kong market. It's down 3%. Take a look at the US market today. It was down over 6%. We're probably going to gap down once again like it did today. We saw this huge red candle this morning. So this is what's going on. Alibaba stock is falling. SoftBank may be getting ready to sell its huge stake. So take a look at this article. Alibaba on Friday filed with the Securities and Exchange Commission to register 1 billion American depository shares. The move paves the way for investors to sell shares in the company that have not been traded on the American market before, such as those listed in Hong Kong or held from before Alibaba went public. An American depository share refers to a stake in a U.S.-listed foreign company that can be owned and traded by investors in the U.S. An ADS is issued by a U.S. bank that has bundled shares of foreign-listed companies into what is called an American Depository Receipt, or ADR. Alibaba's ADS registration represents more than $120 billion worth of stock that may soon be traded in the U.S. Such a large amount could signal a looming exit by a major investor, according to analysts at Citi, which also is Alibaba's U.S. depository bank. SoftBank said a team at Citi led by Alice Yap, the Japanese investment group, owned almost 25% of Alibaba and invested in the company before it went public. As a result, much of its stake is likely not registered as American depository shares. This is what her and her team said. While we believe a portion of the new registration could suggest future new shares to be issued pursuant to the Employee Equity Incentive Plan, we believe it may also suggest potential selling intention by SoftBank. SoftBank owns the equivalent of more than 673 million U.S. shares of Alibaba, which represents most of the ADSs recently registered by the company. If they start to sell their shares, this is going to create a lot of panic. And it can easily go down below $100. I would highly suggest taking some action now if you are holding a large position. So this is what my plan is going forward. I'm going to choose an expiration date, possibly March. We're going to look at some puts. We're going to go out of the money just in case a black swan happens with Alibaba. Nobody knows what's going to happen in the next few weeks, few months. But what we want to do is protect our portfolio as much as we can. We want to try to reduce the loss if we are a long-term investor. So the puts right now are fairly high just because Alibaba sold off today, and they'll probably go much higher because it's going to be more panic selling tomorrow. So right now the 100 puts are going for $400. It's very expensive. So what I'm going to do is I'm going to buy a put debit spread. So it consists of two legs. We're going to buy the 100 puts and we're going to sell the 95 puts. We're going to pay a debit of $110 to potentially make a max profit of $390. I know it's not a lot of money, but if the stock continues to go down, you would be glad that you have some hedge to cover some of those losses. What else we can do is we can go further out of the money just in case it drops 20%. We don't know what's going to happen, but if we just invest just a small portion to possibly protect our losses. So this time I'm going to go with the 80 puts. We're going to buy the 80 puts and we're going to sell the 75 puts. So we're going to pay a debit of $28 to potentially make a max profit of $472. So we are risking a very small amount to potentially protect our portfolio in the short term. We don't know where Alibaba is going to be, especially after earnings. We don't even know when earnings are. We have seen American stocks trade like penny stocks. We have we have Facebook, we have Netflix, we have PayPal go down so much. So we don't know how much Baba can possibly go down. What I'm going to do tomorrow is possibly buy 20 of these, pay $500 to potentially make a max profit of $9,000 if Alibaba goes below $75. That is the worst case scenario. If we take a look at these volume here, the 75 puts have 2,000 volume traded. That means people are expecting Alibaba to go to 75. Just worst case scenario. You can go further out in expiration dates, possibly April, and try to buy some of these puts as well. We have the 65 strike going for $76. We don't know. We have seen other Chinese stocks that have just gone down 95%, 50%. I'm not saying that Alibaba can go down that much because we all know that it is undervalued, but that is not the case and hasn't been the case for the past year. Let's take a quick look at this 9 months chart. This stock was trading above $200 and it reached a low of 108. So there is a strong support there, but if it breaks that support, it can easily go down. And we don't want to lose what we already have in our portfolio. You know, a lot of people said that 200 was a good buy, 180, 150. I heard it all. Even 140. And now we are trading at 115. I am holding a fairly large amount of Alibaba shares, and I am scared for what's going to happen, especially after earnings, and especially what's going to happen with SoftBank. We just don't know. Uncertainty. People don't like uncertainty, so they're going to panic sell. So that's pretty much it. Let me know if you are hedging your portfolio. Are you cutting your losses? Are you buying the dip? And also, I do have a Discord, so if you guys want to share ideas and talk about Alibaba, definitely come check it out.